The world's biggest asset manager beat the street with third quarter earnings today. They came in at $2.75 a share, 29 cents better than projected. Net income rose 74%, thanks in part to the acquisition of Barclays Global Investors. Joining us now to talk about that result is CEO Larry Fink. Larry, congratulations on the report this morning. How far are you into this integration of Barclays Global?
Well, thank you, Margaret. Integration takes about 2 years. The first part of it is really of a cultural integration, making sure that the organization is working as a team. We call it the One BlackRock platform, and we have completed about, I would say, 90% of that, of the cultural integration, the leadership changes, governance model change. And then we have a technology conversion, which generally takes about 2 years. We have a product called BlackRock Solutions that we are the largest client of that. And it's bringing all our global footprint, all our client contacts, all our risk management tools, our compliance onto one global platform. And that's about a 2-year integration process, and we're on schedule, and we feel good about that too.
Well, I know on the conference call that just wrapped about an hour ago, you said that BlackRock may raise the dividend, may consider buybacks in 2011. What could complicate that horizon?
We forecast cash flow next year to be over $2 billion. It could be larger than that depending on our year. We have historically had a 40-ish% dividend policy, and we did buy back stock, so we utilize as much as 50% of our earnings. We do not have any proprietary trading desks. We do not use our capital to trade against our clients. So we're not a big user of capital. So we are going to relook in our February board meeting our dividend policy. But what we will be paying attention to is the government's policy on taxation of dividends. If they happen to raise the dividend taxation policy and dividends are less positive for our client base, we may use we may have a larger component of share repurchases. If they extend the Bush tax cuts related to dividends, we would probably significantly raise our dividends.
Well, looking at Fed policy right now, away from fiscal, you talk in your earnings release about these persistent low rates as a tax on savers and a tax on pension plans. I mean, when do you think that the Fed should reward the savers and raise rates?
Well, I think the first thing the Federal Reserve has to pay attention to is our jobs. A 9.6% unemployment rate is totally intolerable for our country. And I think they have to find ways to reinvigorate the economy. And they're doing that through keeping rates very low. And if they do another round of quantitative easing, I think they're going to bring rates down further, which in our mind will stimulate the stock market. And so we expect the equities to be up 10 to 20% over the next 12 months. And it's through that wealth effect that we believe will create more jobs. If we start seeing a wealth effect from a rising equity market, well, the presumption if the equity market raises, we would then be able to I lost my piece, but we would be able to see that the Federal Reserve could raise rates at that time.
I was starting to say, you know, financials are obviously under pressure. I know you did say on the call this morning that you thought that the sell-off in bank stocks was overdone in terms of the concern about mortgage buybacks. We've seen reports of anywhere from $50 billion to $100 billion in there in terms of the cost of repurchasing some of those bad mortgages. Are those numbers overdoing it?
Well, this is a problem. And I think it's a problem associated with not just a mortgage buyback, it's a problem of foreclosures. We're going to have as much as 4 million foreclosures over the next few years. And so the whole mortgage market is still an area that, you know, needs to be fixed. And so it's a combination of the foreclosure problem that's really, you know, causing investors to be concerned about the bank stock. And then on top of that, the question is, were the proper mortgages included in the origination of these pools? And that's what the investors are asking. The size of the question of the amount of mortgages put into the pools are in the hundreds of billions of dollars. And the real question is, was there any, the question will be, what component of those pools were mortgages improperly put in, and then what were the losses, what can be the proven losses of those mortgages in the pools. I don't think it's going to be that large. I think it's a 4 to 5 year process.
Okay.
As a fiduciary, BlackRock has to make sure that what securities were purchased on our behalf for our clients, we have to make sure that they were what we thought they were. So we need to have that inspection and alleviate any of that uncertainty. We do believe there are going to be losses in the banking system related to this. As you know, banks have set aside reserves for this.
Right. Do you think they're adequate?
I think they're, at this time, I think in some cases they're probably adequate. Other ones, they probably have to include more. It really depends on the scale of which securitization happened, and more importantly, not just securitization, where they put in improper mortgages into the pools, where they, what percent of that is a problem. So this is going to be a problem, though, that's going to be with us for some time until we have more certainty as to what was included in the pools and what were the losses to the investors.
Obviously, and I know it has been made clear you're not prepared to talk today about the possibility of a lawsuit there with BlackRock and PIMCO and New York Fed suing Bank of America specifically, so we won't go there. But talk to me about defending your bondholders.
Let me just step back for a second. There has been no lawsuit. That's incorrect. There has been a request for information. That's all there is. There has never been a lawsuit, and I think the press has gotten this much larger than it is. Whether we are involved or not involved, I'm not going to say that, but the request for information was sent to banks earlier this week, and there's a 30-day cure period, and whether there is a lawsuit or not will be determined in another 30 days.
Right. Well, I mean, in defense of my fellow people in the press, I think the comments in the B of A conference call also elevated that in terms of the accusation that perhaps you thought you were buying a Chevy and now asking for a Mercedes. You don't think that's a fair characterization of the situation?
Well, or did we buy a Mercedes and get a Chevy? I don't know the characterization, and I'm not, I'm not making any presumption. But there is enough uncertainty that, as a fiduciary to clients, investors need to seek that the loans that were put into these securitizations were proper.
All right, Larry, thank you for your time on what was a busy morning. I appreciate it.